Transaction monitoring for anti-money laundering or AML and counter-terrorist financing or CTF is vital for detecting and preventing illicit activities within financial systems. What is the role of AML and CTF transaction monitoring? AML and CTF transaction monitoring involves systematically reviewing financial transactions to identify suspicious activity that may indicate money laundering, terrorist financing, or other financial crime. Financial institutions use transaction monitoring systems to scrutinize customer transactions, normally on a daily basis when it comes to AML and CTF. It's an important component in any AML and CTF compliance regime because it helps detect suspicious activity. Transaction monitoring helps detect unusual or suspicious transactions that deviate from a customer's normal patterns. This early detection is important for preventing financial crimes before they escalate. It promotes compliance with regulations. Regulatory bodies require financial institutions to implement robust transaction monitoring systems. Compliance with these regulations helps avoid hefty fines and penalties and ensures the institution operates within legal frameworks. It protects the financial system. Effective transaction monitoring safeguards the integrity of the financial system by preventing it from being exploited for illegal activities. This protection is essential for maintaining trust in financial institutions. It helps in mitigating risk. By identifying and addressing suspicious activities promptly, transaction monitoring helps mitigate the risks associated with financial crime, including financial loss and reputational damage. What's the role of transaction monitoring in ongoing due diligence or ODD and enhanced due diligence or EDD? Well, transaction monitoring is a key component of ODD. It involves continuously assessing customer transactions to ensure they are consistent with the customer's known profile and risk level. ODD helps maintain a current understanding of a customer's activities and any potential risks they may pose. When it comes to EDD, for high-risk customers or transactions, EDD is required. Transaction monitoring systems play an important role in EDD by providing detailed scrutiny of high-risk activities. EDD involves a deeper investigation into the source of funds, the purpose of transactions, and the overall risk profile of a customer. What are the typical features of a financial crime transaction monitoring system? You get automated alerts. Systems generate automated alerts for transactions that trigger predefined red flags or risk indicators. These alerts prompt further investigation by compliance teams. There's rule-based and behavioral monitoring. Rule-based monitoring uses predefined rules and thresholds to flag suspicious activities. Behavioral monitoring analyzes transaction patterns and behaviors to identify anomalies that deviate from typical customer behavior. You get batch processing. There are batch processes in place which are run normally daily to review transactions in bulk, which help identify patterns over an extended period of time. You get risk scoring. Transaction monitoring systems assign risk scores to transactions based on various factors such as transaction amount, frequency, and geographic location. Higher risk scores indicate a greater likelihood of suspicious activity. There's case management. Effective systems include case management features that allow compliance teams to track, to investigate, and document suspicious activities. This functionality supports thorough investigations and facilitates reporting to regulatory authorities. And integration with other systems. Transaction monitoring systems often integrate with other financial crime prevention and management tools such as Know Your Customer or KYC databases and sanctions lists. This integration enhances the system's ability to detect and prevent illicit activities. To wrap this up, transaction monitoring for AML and CTF is an important tool in the fight against financial crime. By continuously scrutinizing financial transactions, financial institutions can detect and prevent suspicious activities, comply with regulatory requirements, and protect the integrity of the financial system. Understanding the role of transaction monitoring in ongoing due diligence and enhanced due diligence, along with the typical features of a robust monitoring system, is essential for anyone involved in financial crime compliance or financial crime prevention. Don't forget to like, subscribe, and hit the notification bell so you never miss an update. And don't forget to check out the range of courses I offer that are trusted by organizations around the world, including the US government, EY, Cognizant, Accenture, Tatra, and many more. You'll find all the details in the description below. Plus, you can connect with me on LinkedIn where I share plenty of valuable content. Make sure to check out my other video on financial crime technology and my video on what is trade-based money laundering.